Well, hello, everybody. Welcome to Monday. The S&P 500 was up 0.9% today. The stimulus package got signed. That's a big deal to the market. Throw that on top of all the other things that are going along to kind of help this market continue to grow. And it really, I think, is a big piece of the puzzle altogether. So very happy to see that signed. Um, I do want to talk a little bit about today's leadership because I thought it was interesting. Uh, on Thursday and today, the last two market days, it has been the big tech stocks, the Apple, the Microsoft, the Facebook, the Amazons, the Googles, that have shown a lot of leadership and outperformed the market. Um, uh, One of the things that was happening before, back in April through really July, August, we saw that same group do quite well, but they've really slowed down. September, October, November were not great months for these big tech stocks. So it's interesting to see them running right now. I don't know if it's the beginning of a trend or something we'll watch for. The only thing I would be cautious about is that the volume has been quite low. I mean, Thursday was a half a day, and today the volume was pretty low too. A lot of people probably on vacations. So we'll just watch that and see how that plays out and see if that trend is something, that we need to look at again. We still have exposure to that, but we have lightened up our exposure to those just because they've kind of, slowed down so much. Um, at end of the year, lots of articles coming out about what people think are going to happen next year. Some of those are about the market, and quite a few of them keep talking about how 2021 could be like 2000. And in 2000, the market got very overpriced and fell apart. All right, so here we are. Market's been running; it's very strong, and so this must be like 2000. But there's some key pieces that are really missing, in my opinion, that aren't there. So let me just share with you a couple of things real quickly on how I might look at this. This is the S&P 500 for the last 25 years. Here's our 2000 downturn, 2008. Here's the pandemic downturn at the beginning of this year. And so these are, still very good market and lots of upward trend there. But, if they're saying we're right here, let me make one counterpoint that I think is kind of interesting. This is from a website I really like called Macro Trends. This is the Fed funds rate. Okay, so this is the rate that essentially sets other interest rates and is controlled more or less by the Fed. And you can see here what they did back starting in kind of 93. We started raising rates and we had fairly high rates and this is the last 25 years worth of data here. And the market fell. And so they lowered rates. And then they did straight up rate increases. I think they did 21 in a row here prior to the 2008 downturn. Again, they were trying to squash the housing bubble, which they did, which squashed every other bubble at the same time. But we ended up with this big downturn and then very low rates. And during this low rate period here, we did not have any really big crashes. Then they started raising rates again. And then lo and behold, here we are starting to come back down very aggressively after the pandemic hit. So my key point here would be, unlike 2000, unlike 2008, they were not raising interest rates dramatically, going into those downturns. We've had interest rates that have been lowered that are continue to be low. We have the Federal Reserve saying they're going to keep it low. This would be a first to have a big monstrous market crash, 40, 50, 60%, with interest rates at near zero. So it is possible. Anything's possible. But that low interest rate keeps driving money out. Throw a stimulus on top of that, throw a vaccine that seems to be working on top of that, get all this cash that's been saved in 2020 some of it might come out in 2021. I think things are lining up, more so for the positive side than the negative. I think it's important to look at both. It's important to understand both. But I don't know that, we're going to see so many big downturns in an environment with really low interest rates. That hasn't been true over the last 25 years anyway. So anyway, let's see what happens tomorrow. Looking forward to see how this all plays out. And I will talk to you then. Thank you.